Hey, Alex, can I interject for a second?
Of course.
I'm just going to give I wanted to introduce somebody on stage here, and you're going to introduce everybody, but I think it's very important that we recognize one individual because he's got some fantastic credentials. To your right directly is Dave Bradley, and he is, and you can check this on his website, he is the strongest and best-looking Bitcoin entrepreneur in Canada. So it states so on his website, so make sure you check that out. It's excellent. Yeah.
Let's hear it for Dave Bradley. All right, welcome. This panel, we're going to be talking about building a Bitcoin business. So we have, as you have already heard, Dave Bradley. We've got Zack. What's your last name, Zack?
Zack Pardey.
Okay. And Becca?
Becca Rubenfeld.
All right, so what we're going to do is we're going to take a moment, introduce yourself, say the name of your business, very briefly what your business does in Bitcoin, and then we'll just kind of wing it. Q&A, see how it feels. Go ahead, Becca.
All right, so Becca Rubenfeld, I'm co-founder and COO of AnchorWatch, which is an early stage startup, and we're going to be offering Bitcoin insurance and a suite of risk mitigation services. Our first product coming out is self-custody insurance.
Nice.
I'm Zack Pardey. I am the CEO and founder of a company called Bold, and we're bringing to market a credit card that is collateralized by Bitcoin. So if you want to spend on a revolving line of credit against your Bitcoin holdings without actually having to sell that Bitcoin, you want to be able to do so on a card that's accepted everywhere credit cards are accepted. That's what we're going to bring to you.
Okay, I have an immediate question really quick. How, you pay that in fiat dollars? Pay the balance off in fiat dollars?
You can pay down the balance in fiat, or you can pay down the balance from your collateral. You can pay down the balance in Bitcoin. So it's a way to get the spending power against your Bitcoin and be able to actually pay later like you can with a traditional credit card. So you have that ability.
Very good.
Thanks. In addition to being the strongest and best looking Bitcoin entrepreneur in Canada, I have founded a few different companies in the space, one of which is Bull Bitcoin, that some of you may have heard of in Canada. Right now, I am the chief revenue officer for a company called Bitcoin Well. We buy and sell Bitcoin a variety of different ways. We have an online platform. We have about 300 Bitcoin ATMs across Canada and 2 offices, and we're publicly traded on the Canadian Stock Exchange.
That is so cool. I didn't know you were the founder of Bull Bitcoin. I love that company too. Great swag. Okay, so Becca, tell us a little bit more about Bitcoin insurance. So if you do self-custody, I guess there's not a whole ton of people doing insurance products for that, but something that's surely needed.
Yeah, so we're the first doing self-custody insurance for retail. So ultimately, it works really similarly to a traditional property and casualty policy. So whether it's homeowners or precious articles policy that you would take out on diamond earrings or fine art, process is very similar. We also do some additional checks on-chain, as well as ask people to confirm ownership of their self-custody by doing attestations. So with that, along with security procedures that we require customers to follow, ultimately you get covered. We price our policies at launch in USD. We will have Bitcoin-denominated policies as well. And we cover theft of all varieties, so whether wrench attacks, coercion, anything like that, as well as anything that would make your seed plate disappear. So if your home gets washed away in a flood or a hurricane, tornado, house fire, and your seed plate doesn't survive, those are the types of things that we cover.
Okay, so I'm actually super curious about this because I've been thinking about this kind of stuff a lot lately. Can you talk about some of the security procedures you require of your clients? Are you allowed to talk about that?
Yeah, I can talk about some of them, sure. So a lot of them are really straightforward. They're things that I hope a lot of Bitcoiners are already doing. Use that security plate so you've got your backup. We'll provide you with security bags, so you're going to put your seed plate in them. It's sealed, it's numbered. That's going to prevent any accidental exposure, the housekeeper from seeing it, snapping a picture of it, things like that. We have multi-sig policies as well as policies for collaborative custody. So if you have a multi-sig quorum, you can't co-locate those keys. So it's all pretty pragmatic stuff that I think people will have no problem aligning with. We do have an exclusion for watercraft, so boating accidents, alas, not covered. But just about anything else will be.
That's pretty funny. Only in Bitcoin. All right. So can you guys speak a little bit to what are the main challenges that you find building a Bitcoin business, and why do you think building Bitcoin only is the way to go?
Yeah, I'll take that. I think probably the biggest challenge is integrating with the fiat system, right? So like I was just saying, we're building a bona fide credit card. And that requires a lot of partnerships with fiat institutions. And it doesn't make our lives easier when you've got basically all of this shitcoin activity going on that's muddying the waters. That's making our story less credible about building a new financial of a global, a new asset that's going to be the foundation of a global financial system when you've got all this kind of shenanigans happening. So that's a challenge. But why are we Bitcoin only? We're Bitcoin only for exactly that reason, because of all the reasons that we know. So that makes our story more credible, right? We don't have risk at the protocol level. We don't have counterparty risk because of custody, and because we store the collateral in a multi-institution Bitcoin native multi-sig. We have a very clear story that you can see right where it is as a customer, and our partners can see right where the customer collateral is. They can see for sure that we're not rehypothecating it, as has become, unfortunately common in other cases, and often the kind of benefits that customers would get for working with a company that rehypothecates, that risk is very much mispriced. So we don't do that. Being Bitcoin only, not rehypothecating, that story is becoming much easier to tell. So Bitcoin only because we're here for the long term.
Excellent. Dave, main challenges building a Bitcoin business and why Bitcoin only?
So the three biggest ones I think that always come up are banking, Zach mentioned, insurance, and regulation. Like those are pretty constant for every business, and I think we're moving in the right direction on those in a lot of ways, and it's getting a lot easier to solve those things. There's a couple other unique challenges, I think, to running any kind of Bitcoin-related business that are pretty interesting. One is your customers are inherently low time preference. So, like, if you're wanting to sell swag, or like a really good friend of mine, Madex, sells very excellent art. It's really tough in the bear market. Nobody spends money, right? Where every dollar that most of the people at this conference earn is probably going into Bitcoin at these prices, and so it makes it hard to sell anything else. And you really have to design your product or your service to cater to those low time preference people that want something that will last, that's worth the money. We've all had these moments where we bought something with Bitcoin at some point, and then now you look back and you're like, oh, I'd have like $5 million if I didn't buy that hat, right? and that affects people. So I'm like cheap as fuck with my Bitcoin now. I wish I was years ago. So that's a unique challenge you have to address. And the other one that's kind of like a back-end thing is and we're seeing this right now in this whole stupid crypto meltdown, is that there's so many services and companies that we all build our businesses on. And we use different wallet providers, we use different APIs, pricing services, all this stuff. And all of this stuff is sort of exposed to the crypto bullshit. And so when a company like FTX goes down, like, nobody knows, are our liquidity providers solvent? Are the loan companies that are doing this going to suddenly go under? And it would be great if we weren't exposed to that whole world of bullshit, but really, like, a lot of the liquidity that runs into the space comes in when there's like a massive bull market and people get in for the quick money, a bunch of them get burned, a bunch of them become Bitcoin maximalists, and then that's sort of what we have to deal with. And I'm hoping that we're going to see, based on this meltdown, a shift from some of that infrastructure moving towards Bitcoin-only infrastructure. Because there isn't, like, if you want to get a wallet provider for like a hot wallet for an exchange, like, I don't think there is a Bitcoin-only one. So.
Okay, fair enough. Becca, thoughts?
Yeah, so insurance is the second most regulated business after banking. So
I thought that was cannabis. No?
I bet it. Try to get insurance on cannabis. You'll figure out which one is which one is trickier. So, I mean, we spend a lot of effort interfacing with regulators with legacy insurance, and we are doing a lot of disambiguation between crypto and Bitcoin as well. I mean, I have to say this week is pretty helpful for my narrative. Ideally, people are practicing self-custody, and as we've been building this business, it becomes evident that there are opportunities all over the place. So not only self-custody for retail, allowing people all the benefits of self-custody, but with the risk removed, but there's a lot of opportunity at institutional level as well. Lots of redundancy that's not in place that should be. And so just going out and doing a lot of education. And so I think compared to maybe a different kind of business, maybe your sales pitch doesn't start with a month-long education session. And that's really where we go with the clients that we're talking to, is like we really do have to go way back to the very beginning, and it just kind of lengthens the cycle.
Are you insuring institutions as well?
We will be. Our first product at launch is on a personal line, so it's retail focused. But
Okay.
we have a whole game plan, and we will have institutional grade, both insurance as well as other services.
We have to connect later.
Okay.
I suspect a lot of our clients would be interested in what you're doing. I didn't even know you existed.
No. We hear lots of appetite at every level. So when we started, we really were focused retail. It's very, very clear. There's a lot of need for a variety of insurance products for Bitcoin businesses. Not only to underwrite their own activities, even just typical insurance that another company might get, like directors and officers insurance. It should be a really inexpensive thing. It should be a fairly minimal cost for your startup. However, Bitcoin businesses get hit with what we call the crypto tax. And ultimately, we get charged far higher rates.
Well, for whatever reason, they look at it as riskier. Therefore, they want to build some kind of risk premium into the fees sometimes.
That's exactly right. And often, and one thing I think we're lucky for is that the Bitcoin-only community, tends to be highly ethical. But the reality is, when insurers are looking at the industry at large, they're looking at a lot of bad actors. The place is a cesspool, like filled with bad behavior, bad actors, and that gets priced in.
No.
Yes.
Yeah. Okay.
So.
All right. So, crypto meltdown, as Dave says, is this good or bad moving forward for Bitcoin-based businesses? What's the deal?
Yes.
There you have it. You can all leave now.
Yeah, I think it's both good and bad. Right. I mean, it's bad in the short term because, like we've all said, and I think are on the same page about, it muddies the waters, and wrongly it gets Bitcoin tossed in with all of these legitimate scams. But in the long term, I said yes. I think it's good in the long term because it's going to have to happen eventually, right? Because these things are scams. And so, maybe the sooner the better, and they're revealed as such. It gives Bitcoin more time to differentiate itself in the eyes of, pre-coiners, and, as distinct from, like I was saying, kind of just, these scams and shenanigans and schemes that are going on.
I'd say it will all shake out to be good in the long term. I mean, there's a lot of pain, a lot of people, a lot of individuals, a lot of companies getting hurt. That's not a good thing. I think at the end of the day, what's the phrase about sunlight as a disinfectant? we know there's a lot of bad behavior, bad practices, things that audits certainly should have uncovered, and if they did, they were ignored. So generally, I appreciate that everything comes to light and hopefully it gets washed away and puts us in a better position for the next cycle to put up those defenses and hopefully prevent as much of it in the future.
Dave, thoughts?
Yeah, I think it's ultimately a good thing. It's going to be kind of rough, especially with things like insurance, because we get lumped in with them. You know, we're like, to the outside world, we're part of the cryptocurrency industry, and as much as we don't want to be in there, and as much as we keep saying things like self-custody, all these things that seem fairly obvious to the Bitcoiners that have got things a little bit more figured out, to somebody else looking at it, like the difference between Tron and FTX and Bitcoin may not be immediately obvious, and what they see is just scams in the space, money lost, people hurt. Ultimately, every time that happens, there's more Bitcoin maximalists made, because some of those people who get burned, some of them quit and leave forever, and some of them are like, oh fuck, I should have listened to that guy, that asshole at the meetup.
Those toxic Bitcoin maxis, you know who you are.
Should have listened to Dave. But yeah, ultimately, we're gonna have more of these. Like, this is definitely not the last crypto meltdown. There's many more to come, and it's gonna be some short-term pain every time, both on the price side as well as how it affects the outside world's trust of us in the industry. And it's gonna do, like, we at Bitcoin Well, we have absolutely unreasonable insurance premiums. Like, it's not okay, and that's because we're in the crypto industry, and the risk profile that we present is completely different than something like FTX. Like, it's not even in the same realm, but we're gonna get burned because of that in the short term. So I think there's gonna be quite a bit of pain, especially for those of us in the industry in the short term, but ultimately, like, there's no other, it doesn't really matter whether it was good, because there was no other outcome. Like, we had to go through this pain to get rid of the cancer in the industry.
Let's go. I like it. On the show that I do, we call it the crucible. Like, Bitcoin is the crucible. You go in one end, you get smashed up, and you come out the other end stronger, better, purer, having more understanding. And these phases cause more generations of Bitcoiners to be born, really. Climbing Mount Stupid, figuring out what we should not be doing. I suspect there's people here today at this conference, after going through this conference, watching what happened this week, have figured out, yeah, screw all that other stuff. I'm a Bitcoiner now. Fair? Do we have any in this room? Are you brave enough to raise your hand? That guy right there. Oh, what's up, dude? He's a plant. All right. I would like to give each of you a couple minutes to maybe talk about whatever you think is most important for people who might be considering building on a Bitcoin business to know. And then maybe, if it's okay with you guys, we might be able to open it up for questions from the audience a little bit. Yeah? Becca?
So most important for somebody to consider when they're building a Bitcoin business? Is that the question?
Yeah, like if you were to rewind the clock and you could say to yourself before you even started, when you start to build this Bitcoin business, this is what you need to know, what would you say to yourself?
I would advise them to think hard about their treasury management and their burn, thinking hard about what the mix of USD and Bitcoin in their treasury is, and their ability to...
Why? Why is that important?
It's a volatile asset, and you have a limited amount of capital to achieve a certain amount of milestones, and if your capital disappears faster than expected, it could ruin your company. So it's something that I think Bitcoin founders in particular really need to think hard about. Our investors made it clear that they weren't investing in us to be a hedge fund. They were investing in us to use capital to build a business that would add value to Bitcoin in the long term. So we chose to be fairly conservative with our treasury, and that's worked out very well for us.
That is great advice. That might actually be one of the most important things to know, because when the price is running, everybody is super excited and like, yes, this is going to go on forever, and we're all going to be rich. But then it corrects, We don't know how long that's going to last.
So by conservative, do you mean all Bitcoin?
Well, since I said it's going very well for us, you can probably guess we went the other direction. And over time, as our treasury changes and we grow, that mix will certainly change. But it's something that we put a lot of thought into. We got a lot of advice. We considered a lot of different options, and we're pretty pleased with the decisions we made. So.
Excellent. Zach?
Yeah, I would agree with Becca. Your investors are investing in your company that is dedicated to working and building the Bitcoin space. We all want to be fully allocated to Bitcoin if we can, but the reality is that you have runway to think about, and if your company dies because you run out of money, that is a net negative for the Bitcoin space. So keep in mind volatility, of course. Kind of take the conversation in a slightly different direction. One of the challenges that every startup faces, especially at the early stages, is around recruiting, right? So how do you build your team? And what we found is that actually, just get on Twitter. If you're not already, it's all the, LinkedIn, whatever, all these other tools, maybe there's some use for them, but one of the best recruiting tools you're going to find is just get out there and start shitposting. You're actually doing work. And we found some excellent team members and investors, in fact, that way. Yeah.
Just really quick, I totally agree with that. Absolutely, get on Twitter. It may sound counterintuitive, just get on the social media thing and start shitposting. It's not necessarily the shitposting thing that's so important, but getting to understand the culture and connecting with Bitcoiners is extremely important. If you want to work in Bitcoin or build a business in Bitcoin, understanding how that works is very critical, I think, to the ecosystem.
Yeah, so I think building a Bitcoin business is awesome. It's a lot of fun. It's the best community that I've ever been involved in, and it's a very bad idea. I wouldn't recommend it. I would have way more wealth if I had just gone and got a boring job and put all my money into Bitcoin. We opened a brick and mortar store in 2013 in Calgary, and I spent 120 Bitcoins to buy the furniture for the store, and I have one little drawer unit left of that furniture. So everything that you put in to a Bitcoin business, you got to weigh it against putting it into Bitcoin. So that leads to the conclusion of if you can, then do it with someone else's money, right? And I've seen a few companies in the space, as we're talking about treasury management, that have a pretty interesting option. And I take a bit of a different view to the conservative side of things. You obviously don't want to get stuck holding all Bitcoin when it crashes, right? You need funds to operate your business. But what I would do is raise money, use other people's money, put as much of it as you can, whatever you don't need soon. Bitcoin's a savings technology, but it's not good. It's not a good way to save value that you need to use soon. But if you have a longer time frame, if you have years to wait, raise money, put as much of it as you can into Bitcoin, and your runway will, if you've got enough of it, your runway is just going to extend itself longer than you can spend it. So. Yeah, that's kind of what I would look at is the opportunity cost of, not buying Bitcoin is the hardest thing to. It's the biggest trade-off you have to consider, I guess.
Yeah, that's really good. Very thoughtful. I think we have time to take maybe one, maybe two questions from the audience. One. Okay, so this gentleman right here. Speak up. For those of you who didn't hear the question, he really, really, really wants to know if Dave thinks it's... Yeah, go ahead.
I don't really know yet. There's a lot more people in the United States, and I don't know... in Canada, everybody knows each other, right? So it's a pretty small place. So I can say pretty conclusively that I know that I am. We might have to hold a pageant or something to figure it out. But it'd be kind of arrogant of me to claim that, I think.
Now that you are all much wiser and better equipped to run a Bitcoin-based business, Thank you to our panel. Becca, Zach, Dave, thank you all.